Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is Saturday, April the 4th, 2020. Let's begin with the S&P 500. I want to talk about this. I spoke about it on Thursday Night Stock Charts Live, and I want to bring it up again because we're seeing way too many talking heads on CNBC out there pontificating about how this is the bargain of a lifetime that you're seeing, and that they're not saying go all in. I'm not seeing many people say that, to be honest, but I've heard phrases like, and this goes back a few weeks ago, pull forward. Think about this. Pull forward your dollar cost averaging. They've done away with that one because the lady that was on Scott Wapner's show, I could never find that clip on CNBC.com, but I would have played that over and over and over again because anybody who had taken her advice is now so far underwater, it's horrible. Now what they're doing is saying dollar cost averaging in. And to a certain extent, if you're a long-term investor, if you're young, sure, dollar cost average in, stay small. The dollar is rising. Why put all that much capital to work in equities when we're in a downtrend? Wait for the market to bottom out. Do you hear Warren Buffett coming out saying he's buying stocks right now? He loves to do that. But when he's buying stocks, you know that you're at a bottom. So what you're looking at right here, right now, is a chart of earnings, PE ratios of the S&P 500. This is a magnified view right here. And you could see that in red, here's the table here, in red, PE over 20 is overvalued. This is as of April the 2nd. In blue, fair value. Bottoms in a bear market are not met at fair value. Equities tend to get oversold to undervalued, which is highlighted here in green. So I'm going to reiterate what I said Thursday night and what I've been saying for the past several weeks, is that we are just beginning to see the selling here. And I'll bring up a chart. I discussed this on Thursday night. I'll link to the video at the end of this one if you want to watch it. Thursday Night Stock Charts Live. I showed you this illustration. We are here, folks. Here's back in December, January. The shoe shine guy's telling you to buy stocks. Your barber's telling you to buy stocks. Then you go into the new year, and I was saying this, go back to my videos from early February. I was saying they are ignoring the shock to the supply chain that is coming due to the CCP virus. I can't say the name of the, you all know what I'm referring to because YouTube has family-friendly guidelines, and they don't want that word spoken. So the CCP virus, the Chinese Communist Party virus, we were shorting here while the markets were in absolute and utter delusion, then denial. We sold off. Now we've rallied back. And this is when you have the pontificators. They're coming out of their caves. All of them were, of course, in cash, or they were telling their customers to go short the market if they could go short the market. But most of them are long-only hedge fund managers or fund managers, mutual funds. And so they can't short. So the best that they could say was, oh, we were sitting on a pile of cash. We were warning our customers at the beginning of the year. We were worried about too much over-enthusiasm in the markets. And they sit there with that smug, that holier-than-thou attitude, that slick-back hair. They portray that master of the universe attitude. And all of them are just so full of you-know-what. I can't put it into words. But what I can do is this, is while they're out there, and I'll replay these recordings in the future, I'm saying we are here. We are in a counter-trend bear market rally. We are going to roll over, and in all probability, we are going to take out the prior lows of March. Why? Let's go back to the PE. Here we are. We are just below overvalued still on this market. And folks, last week we had 10 million new unemployment applications filed. And that's just the tip of the iceberg. The global economy is closed for business. These PE ratios do not reflect Q1 earnings, nor do they reflect forward-looking guidance. Goldman Sachs actually, it wasn't Goldman Sachs, it was Morgan Stanley came out and they said, we're not going back to pre-crisis business until late 2021. Am I in a rush to buy stocks right now? No. I am looking to the short side as we begin to roll over yet again. Come talk to me when we're down below. And we'll come back periodically. So click that subscribe button, hit the like button. I'll come back here. When we're undervalued on this market, trust me, I'll be the first one. Hopefully before Warren Buffett. I'll be the first one out there saying, you got to buy stocks. We're very oversold technically in terms of valuations. We're very cheap here. We need to be buying stocks. And then you pull forward your dollar cost averaging. Then you dollar cost average in. Then you cover all of your shorts. But until such time, we need to be looking at any rally is to be sold, is to be faded. Don't let these people lure you in with that smug, holier than thou attitude that they have on CNBC. Let's take a look at some of the charts that we're looking at for the coming week and positions. And some of these we already have on. We're just looking to add to them. The TZA. The TZA is a leveraged ETF putting you short of the small caps. The small caps have underperformed the large caps. And I suspect that they will continue to underperform. Now, last week, we had a big reversal week on the TZA. Again, leveraged ETF, not for the faint of heart. If you don't want the volatility, simply short the IWM, which is the long ETF, putting you short or putting you long of the small caps. My apologies. Now, this weekly chart is looking bullish for the TZA. You're seeing that we do have a bit of resistance up at the 80 mark. So we're watching it at current. We have no position here yet. We'll be looking for a good entry point. We'll be talking about the TZA, doing a deeper dive into the daily and intraday charts, possibly tomorrow night on Sunday Night Stock Charts Live, but definitely on the premium content for members as we get new data that rolls out as we proceed into the new trading week. So TZA looking good here. In all probability, we're going to see higher highs in the coming week and weeks. Now, this is a chart of the XLK, the technology sector. This is the Spider Fund. And we are looking to build on our current short position of the technology sector. In this environment, growth does not work. What will work soon will be energy, will be the utilities. We'll probably need another washout, a retest of lows. We'll be looking for higher lows in those sectors and possibly getting long if we see a bottom put in of those sectors. I do not believe that technology is done going down. I think we are going to break down to new lower lows. So we are loading up yet again to the short side here, because what I think is going to happen, look at the volume last week to the downside. Look at the resistance. The market sent us a signal last week, 82.50, stiff resistance on the XLK. And people sold, and they did so in mass. This is not mom and pop selling 100 shares of the XLK. These are institutional investors. The volume bar is well above the moving average. So what I suspect is going to happen here, let's take our crayon out, is that after we have had a huge rally a bear market rally. Usually the most ruthless rallies are in bear markets. In all probability, we are going to break. The best that could be hoped for at current, I suspect they're going to try to pull this, is that they're going to try to rally the market early this week. That's just an assumption. Would I be surprised if they gap it down on Monday? No, I'm not going to be. But given the price action I saw late Friday afternoon as buyers moved in, I got the feeling that they're going to try to prime the market early next week. Now, when am I wrong about technology? Well, if we close out the week next week above 82.50, guess what? I need to cover shorts. But until such time, I'm fairly confident with my projection that in all probability, we are going to break down here on the technology sector. So what are we looking to use as our vehicle? Well, if you don't want the volatility, simply short the XLK or as we are doing, buying the TECS, the Direction Leveraged ETF, putting you 3 times short of technology. And you can see last week we had a bullish reversal bar. We broke back out above this upper band of resistance. I went over this chart in great detail with members on the week ahead commentary. It's already been sent out. And we talked about when I want to add more to the TECS trade. So members, go check that out. What else are we looking at for the coming week? Dust, believe it or not. And many of you out there are probably saying, wait a minute. Aren't you the gold guy? Aren't you the guy that's been saying buy gold and the gold miners? Yes. I think they have come a long way so far. And the price action I saw on Friday was not wonderful. Across the spectrum, I did a huge deep dive with members going over the GDXJ, the GDX, the GDM, that's the gold mining index, the NUGT. And I think that for short-term swing trade, this is not a longer-term play. This is very short-term as a hedge against our current gold mining trade. I think that we may see a pop-up higher on DUST, but that rally is to be sold. Here's a daily chart. You can see that we're putting in a higher low here on the DUST. Higher low on price. So what do? We take our crayon out. And we do this. And we do this. And we look for a breakout. We're right there on RSI. We're seeing higher lows on our stochastics. We saw a bullish reversal bar on Friday. So possible. Triangle formation here. I think that the best that could be hoped for in the short term anyway is a rally up and through the $4 per share mark. That'll be a filling of the gap. And after that, I think that DUST rolls back over again. Unless, of course, we close out the week next week above $4 per share. And that spells a bit more gloomier days for the gold mining stocks. So members, more to come. And with that, folks, please, I want to say, please join us tomorrow night, Sunday night, 6 p.m. Eastern Standard Time, Sunday Night Stock Charts Live. If I could ask you to please smash that like button, crush it, destroy it, help me out with the YouTube algorithms, and also subscribe to the channel. If you know a friend out there that would get value out of these videos, please share the video with them. And everybody have a very safe weekend, please, and a profitable trading week. I'll talk to you soon, and be well.